The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
Wow. I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Assume nothing. In any type of relationship, we can make the assumption that the others know what we think. We don't have to say what we want. We assume that they're going to know what we want because they know us so well. If they don't do what we want, we feel hurt and we think, how could they do that? They should know. Market-wise, let's take a look at it out here. We have the Dow Industrials up 277, NASDAQ up 92, S&P's up 34, gold contract up $8.50, trading at $1,326 an ounce. Silver up 52 cents at $18.41 an ounce. Platinum up 30 bucks, $1,009 an ounce. Copper up a penny at $2.18 a pound. Light sweet crude up $1.72, $49.57 a barrel. Bonds, you have the 10-year note down 9 ticks, 132.31. 30-year bond down 11 ticks, 172.24. The notes and the bonds, folks, refuse to back off these highs. And what that's saying is that this market is doing a dead cat bounce. We're coming up with lighter volume. You get the cash S&P out here at the 2067. I do expect we're going to hit the 2075. We'll see. And we're right next to it right now. I don't expect it today. I expect you're probably going to get into that tomorrow. But that's where I think we're going. Euro. Euro right now is up 4 at 111. King dollar's down 521 ticks at 95.81. You got the yen trading at 102. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the S&Ps, let's take a look at them. What do you have? Okay, so you have the SPY. We're up $3.56. We've done 92 million shares. You're going into 333 million. Yesterday, we did 159 million. Bottom line, it's a B2C of a potential ABC down. You come down with volume, monster volume that is, going up with lighter volume, and the SPY itself, I figure the SPY can get up into this 107.78, get about another point higher in the SPY. The thing's going to kind of set up by going right into the long holiday weekend. And it is a bullish occurrence, folks, between window dressing right here and July 4th. Nice little setup all around, counter trend bounce after the downtrend. Next week, I expect you're going to go flip right around and go right back downtown again. The Qs. What do you have with the Qs? Same type of setup. The Qs today, you're up $2. You've done 24 million shares. The Qs actually look like they want to go all the way up to the lows of where we started from, which is 107.62. So we'll see if it handles the 106.50. Today, what we've done is that it's pretty amazing. We've gone to 106.49. Now, if it can click that other 106.50, 2 pennies up, and then either make it or break it, it would be pretty cool, because that would be the test. It hasn't done it yet, but guess what? We get a whole 60 minutes coming into this close to see whether it can test that area. You get above that area, stay above it, that means that you're going to go to the 107.62. You test it, and you back off at 3 or 4 cents, that means that that's the test right then and there. Small caps. What do we have with the small caps? We take a look at the IWM. Same type of setup in the small caps. Small caps trading at $1.13. You're up 267. We've done 26 million shares. 26 million is going into 74. Yesterday you did 42. What you want to wrap your head around, it's not just that you have lighter volume. What you're always looking for, what I'm always looking for is that if you're going down, you're coming down with good volume. As you go back up, the first day up, you get decent volume. Next day, less. That's what we have going on in these markets right now, folks. Let's go overseas and take a look at overseas, because this is going to be really intriguing. We know that it was the Leave Britain that basically, took these markets south pretty quickly. Now, check this out. This is going to be intense, because when you look at the European markets, it's actually the UK that looks the best. So the UK, folks, made it all the way back to where they started down from. That was 63.38. We closed at 63.60 today. Now, I won't get the volume until another 4 or 5 hours from now. If it did it on lighter volume, then you have a probability that either way, you're going to go up to 64.27 first. That's my take on it. So we're going to go to that level first. We'll see whether it can handle it or not. That being said, what you have is that the DAX in Germany can't go anywhere. The CAT in France can't go anywhere. So the bottom line is that the European Union, Britain leaving, did wonders for its stock market ASAP. Gold contract. What do we have with gold? Gold is trading out here at a price point of 1325.20. You've done 156,000 contracts out here today. What I expect you're going to see with gold is that gold looks to me like, as we come into the end of the week, I expect we're going to back down somewhere around the 1297 area. Nothing heavy, but that's the way it seems to be trading right now. Because when we take a look at it, this is what you have, is that when we went topside, broke a B point, did it with volume. It's a large ABC structure up. That was a huge amount of energy, though, that gets taken out of the marketplace. We did 574,000 contracts. Monday, you did 258,000 contracts. We got to a price point of 1340. Yesterday, we did 196,000 contracts. Today, we did 156. You can see what's happening. As is gold, trying to go higher, it's losing its steam contract-wise. So it's like, you know what? That can back down, get some more cars going, get some more steam under its belt. So that's where my head's going with that. King dollar. Let's go over to King dollar. So King dollar, this is the first day that, well, not the first day. This is the first day since Brexit has happened that the King dollar is not moving with gold. What had happened is that both gold and King dollar were moving higher, and then King dollar and gold were moving lower. And now today, gold's higher, King dollar's lower. Now, this is what the difference is. King dollar has backed down, and the volume's anemic on the back down. So it's like, oh, okay, so King dollar's going to try to make a run higher. That's where my head's going with this thing. So volatility, we got it in spades out here, and you can expect that it's going to stay out here in a big way. This is Tom O'Brien. This is TFNN. We have the Dow right now up 282. You get the NASDAQ up 93. S&Ps are up 34. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Percentage-wise, this is where we're at right now. You get the Dow up 1.6%. You get the NASDAQ up 2. S&Ps are up 1.7. Action everywhere, no doubt. The volume indices, excuse me, folks. Volume indices, how they're going to come in is that we're going to be probably about 1 billion on the NYSE, and we take a look at the NASDAQ composite. And NASDAQ composite is going to come in at... That's going to come in pretty good. NASDAQ composite is going to come in about 2.2 billion. So if we go over and look at that composite, you're up 95 bucks. You're at 47.87. So the composite also can get right up into the low of before we blew apart, which is going to be pretty intense watching that thing shake out. That's 48.59. That's how this looks to be setting up right now, because it looks like it wants to slice right through the 47.98 area. We hit today 47.87. In fact, we're right at the highs right now. I don't expect you're going to, excuse me, folks, I don't think you're going to get those extra 10 points before the close. But bottom line is that I do expect that you're going to see that tomorrow. Because what we do have is that bottom line is that you get fund buying today, you get it tomorrow, you get the July 4th holiday weekend, and that's many times just a huge bullish occurrence, and it looks like that's what's going to fly off right now. If we go over to the XLF, the financials, you'll see the financials. Financials are doing a nice ABC structure on the way down. You get the A to B point set up. It's pretty close that is the C point set up, and this is what it is. So, and this is a nice one, too. So the A point on the XLF is trading out there at the 23.33. B point is down at the 21.32. You know, you came down with 134 million. You came down with 118 million. Yesterday we did 89 million. Today you're going to do all of about 50 million. You know? So that is setting up to go down into these February swing lows that were established out here on February 11th. The XLE, now you had the XLE is up $1.46 today. You're at 67.90. That came off the high with volume. It looks like it wants to test the 68.34, which was the low of the 23rd, and that's right before we blew apart. Let's go to Carlos in California. Hey, Carlos, what's going on, brother?
I'm doing all right, Tom. How you doing?
I'm doing great, man. Thanks for calling. Thanks for holding, man.
Is your cold doing better now?
It's doing better.
Good for you.
I feel better than I sound, but it's weird. But what can you do? Do you know what I mean? So,
Well, I really admire your energy, Tom. You know that.
I admire you listening, growling and prowling with us out here.
Thank you, Tom. Tom, my question is related to the S&P futures.
Yes.
I know you're mentioning that 2075 can be a range or a level that we can reach.
Yeah.
That level has to be on during the day trading. I mean, during the day when we are normally hours, or can be done in the futures after hours.
Well, what happens is this: is that I would say during the trading day. The reason I use the cash, this is what I use the cash, folks, for two different reasons. That the cash doesn't trade. All the equities have to be open in order for the cash number to trade. So it's a cleaner number to gauge where it may go, right? But here, I'm going to go right into the futures and give you the same number, because what you can do when I'm using the cash, and you know, most times, Carlos, what I say is that where I'm gauging that from, and so where I'm getting the 2075 from is the low of the 20th of June. And the reason I did that, folks, is this: is that what markets like to do is that when they go down or up, in this case we went down, they like to go back and, you know, most times if this wasn't as deviant market as it is, I would have said, okay, the 2050 area is the one area it likes to go to. But this market has, you know, been consolidating now for a year and a half, okay? So you can get the identification a little bit better on it. It's like a really deviant move, and it likes going back and forth off those tops of the consolidation, the bottom. So the next level where it really gave it up, and it looked like it could have made it, was the 20th, where we went from 2075 up to 2100. So you went up 25 S&P points, and then on the close you gave back 12 of those points. So I'm suspecting that that's where it wants to get into. So then if you go over, we'll go over to the futures. And the cool thing is that when you're dealing with the futures, of course, and trading them, you wait for it to get right into that number, right? And then see whether you get a rejection or not. Now that number is 2070.25 inside the E-minis, you know? And, you know, what I would also do here, Carlos, is I would line up the aspect of, you know, how we're trading out here tomorrow. You really don't, I wouldn't want to be short tomorrow either. I wouldn't mind being short in the holiday weekend, you know, meaning watching a thing, and, you know, if the volume continues to contract and you get a small rejection of price over the weekend, I suspect that I'll probably put sharp positions on Friday morning right now. You know, the XLF is screaming. You know, that's another ABC down, so.
Yeah. Tom, do you have time for one more?
Sure.
The TF, small cap.
TF?
Can you look at it? Yes, TF, small cap in the futures.
Okay, hold on. PF, no. Yeah, you mean the Russell 2000?
Yes.
Okay, cool. Yeah, okay. Okay. RTAU6. Okay, so we're at 1126. Oh, this one, see, this is getting interesting. Now, this may have, if you're trading this may have topped right now. This doesn't look like it's going to make it to the, this is where, okay, so this came into the 16th of June today, which is the 11/27/10, and we're right there right now, and we got 128,000 contracts versus 78. This one here, Carlos, is really. Maybe you can wait till tomorrow, but this looks like it's going to fail right now. The small caps.
Yeah.
You know?
It looks like even though the percentage seems like higher than the other indices on the futures.
Yes.
Seems like it's lagging. And when we saw the little pullback, I noticed it pulled back faster than the rest.
Yeah, there's no doubt, and that's what does happen. Is that the small caps, you know, and listen, the larger pictures, you have these high volume lows in January and February, and that's where this market wants to go.
Great, Tom. Well, thank you very much. I hope you feel better. Thank you for everything.
Thanks, Carlos. Have a great one, man. Have a safe one. You stay right there, folks. We're coming right back. The Dow right now is up 284. You get the NASDAQ up 90. S&Ps are up 34. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow up 290, NASDAQ's up 92, S&Ps are up 35. Some of the higher volume stocks in this market. You have, let's see, Bank of America is up 47 cents. You get Micron Tech up 21. We got Citigroup up $1.60. You got Microsoft up $1.20. We got Charles Schwab up 69. Oracle is up $1.54. Let's go to Dave in Boston. Hey, Dave, what's going on? You there, Dave?
Yeah, I'm here.
How you doing, man?
Good. How you doing?
Good, thank you.
You definitely sound better.
Thanks.
Yeah. Hey, I wanted you to take a look. I called you last week on Vail.
Okay.
It's going. I noticed it's going up, hitting that $5 with drastic light volume. Getting a little nervous. I know it kind of follows the market. I wonder if I should get out of it, maybe by the end of the week, and see what you think.
Yeah, I'd stay there right now. So let's take a look at it. You get Vail, folks. Okay, the low for the year is $2.13. The highs $6.26. So you're coming into this swing point. Now, the last swing point had light volume, too, and that's what you're talking about. There's no doubt about that, okay? So we're talking about $4.99, folks, okay? So last week, that had a swing, it had 19.9 million. It's going to do about the same. I'd still stay there. The reason is that you haven't hit the 508 yet, which is cool, okay? So it's laying at the high, just kind of building cause there. And, what you get sticking out here, man, is that it's like that 550 to 626 area looks to me like that's where it wants to get hit.
Okay.
So
just ride it out?
Well, what you'd want to do is this. On Friday, right, if it got over the 508 and then closed underneath it, yeah, it's going to have a lot lighter volume. Get out of town, okay? Yeah. If it's just laying at $5, then you're okay, man. You know what I mean? Because it hasn't tested it yet. Because that wants to get tested.
What do we need to get over 508? What are we looking for volume if it gets over it?
Oh, you need more than 176 million on a weekly, and you're not going to get that, man.
Okay.
Right now we're only at 60 million.
Okay.
So.
Yeah. All right, I'll look for that. You got time to look at Hecla?
Yeah, sure. Let's take a look at Hecla. Hecla right now is trading at 496. This is a silver stock. This is going to need more juice too. I mean, larger. What's happening with many of these golds out here today is that they have a lot lighter volume. A few of them are going to fail. The real question is going to be: do you get a pullback off this failure, or do they just stay sideways for the rest of the week? You don't like, and we own this, folks. I don't like seeing stocks over highs with light volume. That's the bottom line. Now, doesn't mean you're not going to go higher, okay? But it just means when are you going to pull back?
Right.
So, and yeah, we have a lot of them out here today doing that. I don't see a disaster on the way back, but I kind of do see, if you heard when I was opening here, it looks to me like that dollar wants to go higher. Pull back today in lighter volume. Gold was testing its high today on lighter volume. So it's like, coming into the end of the week, I'm looking for a small pullback here. That's the reality. So.
Okay. All right, Tom. Have a great 4th, Tom. Thank you.
Thank you so much, man.
Yep.
Have a great one. Have a safe one. Let's go to Tim in Denver, Colorado. Hey, brother, what's going on, man? How you been?
Good, Tommy. Hey, I just got done with what you're dealing with. You still got a few days, man.
Oh, yeah?
I told my wife, I got a cold this summer.
I know, man.
And I lost my voice like you, and you feel, man, I mean, to do the show, I give you credit because I don't think I could have did a show.
Yeah, well, I enjoy it. All you get tigers and tigresses out here growling and prowling. It's a beautiful thing, so... well, this is good to know because, there's a lot of people that have them down in Florida, so maybe it's right across the country, but it's good to know that it's only like a 3 or 4 day deal because that's what it feels like. Do you know what I'm saying?
Yeah.
And I've had it 2 days now, so 2 more days,
Yeah, I'm still blowing. I feel good, but, it's kind of nasty.
Well, one of the tigers, my man Jay in the den told me last night. He's my doctor. I took Johnny Walker Black and honey. It was a beautiful thing, man. And I heated it up, and I did. I went. It's so funny is that I went and I went and I like drinking Chivas actually. And I've never had Johnny Walker Black, man. And that's I said to Bridget, I says, "Oh no, here we go. Now I'm really history because I love the thing." Isn't that crazy? I know, man.
Oh, I love it. Whatever it takes, man.
Big time. There's no doubt about that, man. Hey, listen, the ancients were always right. If we looked up to the sky more, we'd probably have a lot better head on our shoulders,
Exactly.
Okay, so what are you going to look at the SCO?
Yeah, I want to. What's your thoughts on that? You haven't really talked about oil too much, I don't think, and of course SCO goes with oil short.
So the SCO, folks, this is the 200% inverse correlation of the price of oil, and bottom line is that I went short oil today, and I lost money. I did a couple when the numbers were coming. When the numbers,
I didn't get to hear you and Tommy. So
no, that's all right. Just so you understand. So when it come out, but I'm still. It looks to me this contract can't make the highs, number one, and you're going against the downdraft with dramatically lighter volume. So I think the SCO is a trade, man. What we did today. You came down with 649,000 contracts. It would have been nice if oil made the $50.45. What you might want to do is just wait till tomorrow and see if it can make it up there and fail. Because if it does, then you got a beauty on your hands, man. Do you know what I mean?
Oh, it was a hard time not biting today, and I'm glad I didn't. I was going to start biting at 79. And
yeah,
that thing,
it's
77.
Yeah, no, it's great that you didn't. There's no doubt. There's no doubt. And so the SCO, you can kind of see it, the volume expanded somewhat. So it's like the SCO, you're at 78, 50, that can go down to that $76 level, man. The high of the low would be a great place, man, actually, to get it.
Yeah. Yep, I'm going to keep watching it, maybe bite here, maybe tomorrow morning, we'll see.
Either that or you don't bite and you wait till after the 4th so you're not worrying about your trade over the 4th.
I heard you the other day. I don't want to worry about it over the weekend, but if I got to bite, I got to bite. We've been doing this long enough. You know what I mean?
I know. I know. There's no doubt, man.
Hey, well, you have a good 4th, Tommy.
You too, man.
And,
hey, how's the music going? You still playing the guitar?
Doing good, as usual. Doing good. Sitting around the fire. Got a little fire pit in the backyard.
Good for you, man. That's awesome. That's great. Okay. Have a great one, Tim. Have a safe one.
Okay.
Now let's go to our man, Mr. Darryl Martin, okay? And don't forget, folks, every Monday, every Friday, right here at TFNN, 10 to 11 Eastern Standard Time, Darryl, my son Tommy, we do a show, the Nadex Bull Bear Binary Option Hour. Great show, folks. You can test drive the Nadex platform right now. Just come over to our website at TFNN. You hit the banner, bring up the platform, and we're going to have a short break. Darryl and I are going to be coming back. We're going to be talking about how the Nadex platform works and defined option contracts. You stay right there, folks. We're coming right back. Dow Industrials right now are up 277. You get the NASDAQ up 89. S&Ps are up 33. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 268. You get the NASDAQ up 87. S&Ps are up 32. We get our man, Mr. Darryl Martin, up. Darryl Martin, what's going on, brother?
How you doing, man? This volatility's been fantastic, hasn't it?
There's no doubt. Okay, volatility, folks, is a trader's best friend. Okay, because the bottom line, you can be a bull or a bear. You get volatility. Guess what? You just got to take the money off the table when it's coming at you. That's the bottom line.
Exactly. Got to be quick on the trigger, in and out.
There's no doubt. I mean, when you take a look at the range that we've had inside the S&P, you're talking only 5 days, and you're talking, you went from 2103 down to 1991, and right now we're back to 2071. So big numbers.
That's just crazy.
So inside the Nadex platform, what have you been doing out here?
My favorite thing has been focusing on Forex right now.
Okay.
So just a ton of Forex volatility with Brexit.
Yep.
It doesn't look to be lightening it up at all. So I mean, I've done some indice trading, done some trading on the Russell, and some of the other energies and stuff. But the majority of my trading has been on FX.
Yeah, and that is not going to slow down anytime soon, folks. You know what's wild out here, Darryl, today, which is going to be pretty cool watching the shake out, how this works, is that what we had, folks, is that so picture it's the United Kingdom that, is leaving the European Union. Well, the FTSE 100, which is the United Kingdom, in 2 days took back everything that it lost, 3 days. It's over the highs right now, where it started from, and the CAT in France and the DAX in Germany, in fact, all the other indices are not even close. They didn't bounce at all. So it's almost like, man, this is going to be wild watching this thing shake out,
Right.
Because, what is that saying? So far what it's saying, folks, is that the equities that are based out of the UK, people are buying. That's what it's saying. Now, it's possible that they're buying because, as Darryl say, he's been trading the currencies, because what has happened, so picture how important currencies are. What has happened is that because the British pound went down so quick, it's like getting a 15% discount on everything you're buying, inside the FTSE. Isn't that wild when you think about it?
No, that's absolutely are the stocks going up because basically would it be? I guess it costs less. People go there; they can spend money there from the EU or any other country.
Yeah, watch. So if
they get a better conversion rate, so that it sort of brings in a bit of business in a sense.
That's right. So watch what happens. What happens, folks, is that if you live in the UK, okay, it doesn't mean that you're going to go buy the UK stocks immediately, because you really don't have any more money. What ends up happening is that you still have the same pounds, okay? But for large funds, right, like large funds in the U.S. or in Asia or in other parts of, well, not in other parts of, in Europe, outside of England, right, what happens immediately is that because the pound got slammed so much, is that, if we bring up, it doesn't matter which stock you bring up, if we had bought that on Friday, okay, so let me just bring up their best stock, performing stock out here today. Let's see. Yeah, so their best performing stock, I can't pronounce it. This is so funny. It's a silver and gold exploration company. Bottom line is that today was 15% less than it was on Friday. If we were using our dollars, okay, or European euros, you see what I'm saying? So yeah. I can understand why it went up, but, we'll find out when it tests that high there, what exactly can it handle it or not, But that's why it's important to understand those currencies. And that's the Nadex platform, folks, is phenomenal on currencies. And if you, work, which I know we all have to work, you can be trading currencies at night, so.
Yeah, you can trade at night. Early in the morning. I started off doing a lot of my trading early in the morning before I went to work when I had the 9 to 5 thing going on.
Okay. Yeah.
And you can do that on Nadex. You can get up and trade from 5 to 7 or whatever. So. And
it's defined risk trade, folks. Okay, like you just heard me. I was just talking with Tim. And I was talking. When the oil supply numbers come out on Wednesdays at 10:30, I love to trade those, right? Well, yeah, I lost money, but guess what? I lost all of $115, and I could have made 5, 6, 7, even more. So that's the type of defined risk trades that you can do on that platform. So it's pretty cool watching the whole thing shake out, no doubt. So hey, listen, what do you got going on for July 4th?
My daughter, she won the Pinto World Championship last week.
Yeah, we saw the pictures. They were fabulous, man.
Yeah, she got her jacket and all that, and she just got a big award from APHA. She's competing in the Paint Horse World Championship this weekend.
Okay.
And then she's going to the National Little Britches Rodeo Final. She qualified in flag racing, barrel racing, and pole bending. So we're going to do that. We're going to be out there all week. So out in the middle of nowhere, Oklahoma.
I love it.
So it'll be fun. So there's about 1,000 kids competing.
Really?
Wow. So yeah, it's a pretty big deal. It's all 50 states coming together. So
that's awesome. Okay, well, listen, you have a great one, a safe one, of course. So we'll talk with you Friday.
All right, I'll see you Friday.
Okay, man. Have a great one.
You too, man. Bye.
Thanks. We go over and we take a look at this market. This market's going to want to finish right up at its highs, folks. We got about 12 more minutes coming into the close. Volume, excuse me, folks. We're at 772 versus $1 billion. That'll be about $1 billion, though, in the NYSE. We take a look at the NASDAQ composite. What we have with the composite is running at 1.8, so that's going to come in at about probably 2.2 billion. That's where I expect you're going to see that. We go take a look at the transports. The transports, they not only got hit, they got hit hard, big time. They're up $1.63 today. And what you're going to see is, I expect once I get the volume on the transports too, that's also going to be lighter volume. You came down nice. You came down with the 49 million shares, made a low out there with 32 million. You did the first bounce with 24 million. So the correlation is the 24 million against this 49 million. Let's go over to take what did happen out here today is this. Now this is where this gets intriguing also, meaning if we go take a look at the silver market, SIU 6. So silver caught a nice bid out here today, yet the silver equities didn't get up and go. Now they've gone big time, okay, but this is concerning, meaning that, okay, we're going to get a little pullback here because the silver contract is over its highs. Wanted to test this thing forever, meaning the $18.04. It's at $18.37. Now, on a longer-term basis, my take is we're going to $25. That being said, it's like, you know what? The end of this week is going to get kind of dicey here. And it more than likely is going to have to do with this dollar. I don't know what's going to make this thing move. But when I do look at the dollar, we're at 95.86, and it backed down today, has light volume, hasn't rejected lower price yet. The dollar would have to close inside 95, 92. And it doesn't look like it wants to do that, but, you know, start putting it together. It looks to me like that dollar does want a little bit higher price right now. You stay right there, folks. We'll come right back. The Dow right now is up 277. Nasdaq's up 88. S&Ps are up 33. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 262. You get the Nasdaq up 83. S&Ps are up 31. Percentage moves out here. This is what you have, folks. So in Europe today, we had the FTSE up 3.5%. Big move. The CAT was up 2.6 in France. You had the DAX up 1.7 in Germany. Our Dow is up 1.5. The Nasdaq is up 1.8, and the S&Ps are up 1.6. You got to remember that you're coming into window dressing. What is window dressing all about? Window dressing, folks, is that you're buying that comes in the marketplace the last 2 days of the month. You have buying that comes in the marketplace the first day of the new month. And that buying of the first day of the new month, okay, is crucial to wrap your head around. And that's going to be on Friday, okay, which is the July 4th, July 1st. And what that is that you have all these huge companies. People put money in their IRA, whether it's $10, $100, $100,000. That goes into funds every first of the month, okay? What happens there is that funds do not get paid on cash. So funds put that to work immediately, So that's what you're looking at, and that's specifically how these 3 days work, okay? And it's really important to wrap your head around that. Let's go to Marie in Erie, Pennsylvania. Hi, Marie. How are you?
I'm fine. How are you doing?
I'm doing good. Thanks for calling. Thanks for holding.
Oh, sure. It's a good thing my grandmother isn't around. She put you on garlic.
Oh, you know what? I love garlic, and I had garlic, too. Bridget made me, this is what I had. I had garlic. This is a concoction this was. I had tea with garlic and ginger, and it was a whole clove. Well,
Wow.
not a clove. What are the small ones? It's
Yeah,
not,
that's a clove.
a clove. I had a clove,
Yeah.
not a bulb. Yeah, yeah. So I've been trying everything.
You don't have a sore throat, do you?
I don't. No, I don't.
Okay. The other thing she used to do is gargle with cayenne pepper.
Well, I'll do that. I've been on cayenne pepper. I used to have, there's a diet there it's pretty cool for a clean, just to get clean, folks. Is that cayenne pepper and a maple syrup? Maple syrup.
Oh.
Yeah, and lemon. Yeah.
There you go. I wanted to ask you about TLT. It's coming down a bit.
Okay.
I sold mine, and I was wondering, that might have been a mistake, but where do you think this might retrace to?
Okay, so the TLT, this is the iShares 20-year bond fund. You know, this can, well, first off, it's an ABC up. So let me see this for a second. Okay, you got 128, 137, 9, which is 141. Oh, that's good. That's all right. So it just about finished the ABC up. You know, it made 140.13. So now that thing can retrace now into 136.
Okay.
Pretty easy, you know, and have nothing wrong with it, by the way, you know.
Right.
Even 135. Yeah.
Okay. I was thinking 136, but I was wondering, gee, this market's been moving. Maybe it would go lower, but...
No, it can. Listen, that you know, this got a couple good gaps. There's no reason it can't go to... This can go to 132 and have nothing wrong with it, which is pretty cool.
Yeah.
I would just hold tight. Now, what I wouldn't do, Marie, I wouldn't buy this before the holiday weekend. What I do is let it play out.
Okay.
And then you can jump on it. Because what will happen is that on February 11th, the high of that, which is 135.25, you'll get a feeling there, okay, whether it rejected that price, because that's a high volume level. And then you can match that up with going right over where we were trading on the 24th, also, which is 136 to 135.
Okay.
Well, listen, have a great one and a safe one.
You too. Have a good holiday.
Okay, thank you.
Bye.
Have a great one. You stay right there, folks. Our man, Mr. Dave White's going to be coming up next. I'm going to join him on the first segment, folks, but he's going to be growling and prowling with you. Have a great one. Have a safe one. And, of course, we always look forward to talking to you out here. And don't forget, folks, we start programming 7, 8 o'clock in the morning. Stay right there. Dave's going to be coming right back with you, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Seam in Dallas.
Hi, Tom. I love your show.
Thank you so much.
I've been listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah. I love all the hosts. I love your show. I'm addicted to it.
It's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Well, this is not Tom O'Brien. This is David White, and soon Tom O'Brien, who will be in just a second, as we start the after show for the market today. Up 34.5 points on the S&P cash at 20.70 Volume came in, or has pretty much come in a little bit over 4.1 billion shares on the New York Consolidated Tape. That's a little bit of different volume metric, then a lot of times you'll hear the New York Stock Exchange floor traded tape. But a good day, not a big day. Normally 5-6 billion shares is something that is earth-shattering. 3 billion is rather typical, 3 to 3.5 billion. So volume, good, great, somewhere in there. I'm going to call it a 7.5, not a 10, not a 5, but decent volume. And of course, the second day in a row that we close at the high of days, 2070.77, as we continue to go through that. Since we're going to have a short segment here with Tom O'Brien and then John Logan in the next one, let's just get to it. How you doing today, Tom?
Hey, Dave. How you doing, man?
Good. You're the walking wounded, so we're going to let you go home a little early tonight.
The walking wounded. I like it. Totally.
He's playing hurt, folks. So let's get your market roundup. I haven't had a chance to look at everything quite yet.
Well, you know, my take is that we're setting up a B to a C of an ABC down. You know, that's the way this thing looks to me, like it's laying out. You know, if we look at the SPY bottom line, you know, you up $3.46, you get 129 million. And I think it's going to go up tomorrow, too. I mean, I think we're going to get right into this, you know, 208.92 area. And, you know, then next week, different ball game, you know. We're running into window dressing July 4th. And after a nice downdraft, this is what bounces are all about. And I know that you caught it really nice on those option positions you got, man. It's a beautiful thing, brother.
Yeah, it is. There's opportunities for bulls and bears, but the pigs get slaughtered. And unfortunately, it seems after, I don't know, 17, 18 years of doing this, that there's almost a perverse thrill for people to hop on the market after it's well underway to the downside, only to get squeezed out in these wicked turns back north.
It you know, it's what happens. There's no doubt. There's no doubt. And what happens is that you got to be through a few cycles to realize that nothing goes down forever and nothing goes up forever. And what you try to do, which Dave got done, you know, on that downdraft, folks, is that it's phenomenal what can happen with two different things end up happening on a downdraft. We had the downdraft, and then, of course, in the middle of the downdraft, no one wants to buy calls. So the calls get wicked cheap. And when the bounce happens, the bounce is always very quick, you know. So it's a beautiful thing, man, you know, so.
It is, and, you know, the whole point is to risk the little and smallest you can to make the biggest bang for the buck you can on the opposite side. And taking the weekly seemed like a very smart thing to me, but you never know. They could have gone the other way, but again,
oh,
small
yeah, listen,
loss,
we both know
big
that.
win.
Well, you know, it's so wild, and I know Dave talks about this a lot on his show, folks, okay? You know, he loves all the Jesse Livermore sayings, and he gave me years ago, yeah, that must have been like, oh my God, that's like 12 or 14.
2000 or 2001.
Is that when you gave it to me? Okay, so
yeah.
I got a framed deal about Jesse Livermore sitting on his hands, and it's so cool, man. It blows my mind that's 16 years ago, man. That's crazy. That really is crazy.
It is. Now, maybe just one thing, since we're kind of talking about broader issues here.
Yeah.
My thoughts are that initially, and I don't know, I'm not predicting long term, but initially, money goes to where it's going to be treated the best. With all the indecision in Europe, whether it's the UK or the Europe, I kind of harken back, and I don't know if it was an interview that you did with him or another one, but Joe Granville had the theory that everybody runs to the back of the Titanic when it goes down. They don't all just jump in the water because they're on the front of the boat. They'll come, the pieces and the chairs get kind of rearranged out there.
Yeah.
I kind of thought that there's a good opportunity to maybe have a little bit more and an extended upside into this market as that money still comes here. Maybe it's not enough to continue to keep the market up, but you know, maybe we could even go back up to the previous highs just on that money sloshing back here and still have a market that goes up on lighter volume, and then maybe tag it. And then, as you say, the deviance presents itself. And I kind of thought, I think the interview you did with him may have been around 2007 or 8 on that, and it was that everybody was running out of bonds and equities, and everybody was trying to find anything else to go into to make a buck. Around 2008.
You can definitely see that. I mean, because what's going to happen here is this. At the end of this week, okay, if in fact this, S&P, and it looks like, the SPY looks like it wants to close over the 201. It's like, okay, man, if you close over 201, guess what? Yeah, you can go back up to those highs that were generated in June. Yeah, it's there,
Now there's two sectors that look incredibly bad that I will agree with you on, and that is the financials here in the United States, and of course the energy stocks. Two of the biggest ones that kind of had us up here at these levels. And again, rearranging the deck shares, it looks like a lot of people went into other things other than energy and finances.
Yeah, no, I like the XLF. I can't wait to sell the XLF again. We sold it, we closed it, yesterday, and bottom line, nice little score, and that's going to get sold again. So the banks are going to have a hard time making money because this rate structure wants to stay low for a long period of time. Even today.
Well, a lot of people were saying, well, you know what? There's going to be rate hikes. There's going to be rate hikes. And I think a lot of people bought into that, especially the big men of the street. And now suddenly, 6 months, 9 months, maybe a year from now, maybe we get rate hikes.
I know, man.
So they had to get out of it. I did notice that at least in Europe, I'm trying to think whether it was Deutsche Bank or not. You've got a few snapbacks. Barclays was up like maybe 4%, but kind of a small pop-up in here. But again, nothing compared to the downside on that.
Yeah, no doubt. Okay, man. Well, listen, thanks for doing the program. You have a great one, a safe one, Dave.
You bet.
Okay.
We'll be back on the other side with John Logan after this short time out.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
This is Dave White, and we're going to take a stroll through several opinions of hosts on TFNN. We'll be on with John Logan here in just a second. Just wanted to, if you're just getting into your car right now, and thinking about it, 2070 was the close on the S&P cash, up 35 points. The second day in a row, it closed at the high. The NASDAQ at 4779, up, let's call it 88 points on that. So, decent volume, 4.2 billion shares on the NASDAQ, on the NYSE consolidated tape, 1.9 on the NASDAQ. So the volume was good. I'm going to call it a 7.5, not a blowout 10, but maybe a 7.8. Decent volume. And of course, many people on the wrong side. They bought into the hysteria, and we had a nice bounce here that was, for the most part, I can say, looking at it as a short squeeze bounce, and we're going to find a great deal more out. Anyway, let's go to John Logan. How you doing today, John?
Good, David. Good to speak with you. How are you?
Fantastic. It had a big win today, so it's always good to take some ill-gotten gains off the table. And we'll find out.
I'm always happy to hear stuff like that.
Well, I got a new saying. I was talking to Andy Heck last night, and we were talking about being too greedy. I said, well, I've got a new saying, and that is, don't be a swine, take the dime. So
can I use that?
You can use it.
Thank you.
Anyway,
we signed NDAs and all that, I think, already, though, right?
Yeah. Anyway, you've got a lot of stuff to talk about here. Why don't we start with Urban?
Yeah, let's pull that little puppy up. Let me see.
Because I'm kind of an equity guy, I can see already what you're looking at.
Yeah. Urban Outfitters. What I did is I did a little sort in the scanner. By the way, if people are watching the screen, I was looking for breakdowns in our scanner this afternoon. Guess how many breakdowns there are if you're looking at my the number in my hands there. Relative to profiles, there were 0 breakdowns in the S&P's 500. Out of 500 stocks, relative to profiles, there were 0 breakdowns, which was no. We got 3. Sorry. Here we go. I was doing this 0 sound, man. Alcoa, OMC, TDC. So 3 stocks in the S&P literally qualified for breakdown status today out of 500. I just wanted to point that out first.
Fantastic. Kind of jives with what I was talking about in my show yesterday, which was I think I had some 50 Gartley patterns that looked bullish and some 250 stocks that had tested previous lows on lighter volume out of the scans that I did. So there were a lot out there that refused to go lower.
Yeah, I know. This has been vicious. I mean, this move up. So in a move up like this, where it's kind of dragged some things up and the only predicated 3 breakdowns actually relative to what I look at. I've been looking at Urban Outfitters, and a stock like this that's been just kind of languishing at best. And have you spoken about this stock on your show some? Or no?
I have in the past. I haven't lately. It fits a fairly decent pattern that I like, which is the standard Wyckoff buy pattern, the huge gap up on big volume, and then the nice retracement. I would have liked to seen that day on the 10th of June where it came down on significantly more volume. For a market where they were throwing the baby out with the bathwater, I might put that as a higher signal for that big doji that went down to 25.04 on June 7th. That's kind of a fairly good looking candle.
Yeah, it's to me, you got to really clear this one little last area around 26.92 on Urban Outfitters for me to get really excited about it, just to get a little more confirmation, kind of clear some more congestion, Dave, in my opinion. Then you might have 30 in order and maybe even higher. But right now, the market, to me, just kind of dragging things up the past 2 days has just lifted this up to that resistance area. And this is something, if you're kind of looking for depending on how I don't think the S&P volatility is over. I just don't think it's that easy. And a lot of stocks that have been lifted lately, this being one of them, just getting right back up into, top of a profile here. I'm actually looking at this as a short-term trading opportunity on the short side. But again, with stops in force and a close above 27, I think you could easily see 30 on this stock. So
you could. For me, I don't know if you're a standard kind of Wyckoff guy. I always like to see that low tested at 24.29. Mm-hmm. But when you get 7 million shares tested with 2.8 million shares, mm-hmm. kind of telling you already that the show's over on that, especially on a horrible day like that. Yeah.
Well, I hate to play both sides of the fence. I hate it when people do that to me. But it's at a critical area right now to kind of get to the next level on the long side if you're looking to pick this thing up, in my opinion. And 30's the next stop. But today we kind of got lifted up into resistance. And, if the market kind of settles out here and peters around, the stock market that is, I think this one may relax a little bit on the short term just because it got kind of dragged up with everything else the past 2 days. So I'm going to keep my eye on this one.
I think to me, I would love a test of 24.29 on light volume to signal truly this thing can't go any lower. But you may not get it. I mean, you were into that candle with a whole lot less volume, so you never know. But it's very interesting, especially when you look at many of their competitors that have gone bankrupt here in the last couple of months.
Isn't that incredible?
The best cure for a low price. The best cure for a low price is a low price. Yeah. And Urban Outfitters having competitors go out of business could probably be the best thing for them, right?
Right. Yeah, it's just been amazing how many people have had to punch out of this space. I remember Tommy, one time I was listening to Tommy talking. He said he was watching a U.S. Postal Service guy lift the back of the truck up, and every box in there was Amazon. It's like everybody's ordering everything online. And the brick and mortar, I know it's crazy.
It is. What else do you think you'd like to talk about here? We can go into the next segment, so I don't want to rush you off.
Okay. Well, either way, if you got to cut me, I got people.
No, I don't. Let's go into the next segment here. What's the next thing you want to get into?
Okay. So what I think has been a real strong trade has been obviously kind of catching the bid on the 10-year. And I'm looking at that from a lot of different angles, from global rates, and I know Tom's talked about that a lot. And I'm also looking at the S&P just doing a moonshot lately, and the 10-year kind of sitting on the bid. It sold off a little bit on the close today. But that being said, and looking at that moniker in itself, and knowing that the Treasury market usually kind of, smart money goes to that. There's something going on there. There's some anomaly, and as a trader, that's what you're looking for, anomalies. I want to talk about the Euro trade, and I actually want to talk about the S&P trade when you come back from break.
Well, that sounds fantastic. Well, another day where we closed at the high of day. That's the second in a row. Well, if you want volatility, you couldn't ask for any more than we've had since last Thursday night. And we'll talk to GAL about that, too, as we come back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. This is Dave White sitting in for the one and only Tom O'Brien. We've got John Logan, who starts us off each day at 8 a.m. And where in the world is John Logan today?
Actually, I'm in North Carolina today.
Okay.
Yeah, I know. I travel a lot. But
you and Waldo. So we got to find out where you're at.
Hey, listen. For people out there who have never listened to your show that are riding around right now, man, do yourself a favor. Listen to David White's show. I learn something every time I watch your show, man. Just a great piece.
Fantastic. Anyway, let's get to what you want to talk to, and then I've got a question for you.
Okay. So what I'm doing is I'm looking at the 10-year, and obviously that's no mystery to anybody that's looking at it. Also, we've kind of been sitting, got a little bit of a sell-off on the close, but I'm looking at the classical pattern. After that sell-off in the pound, the global fear, the world's coming apart at the seams, and everything's going to have to reprice itself. Revenues, how do you count on where currency valuations are going to be, blah, blah, blah. So, the safety and the piling into the 10-year and also relative to global rates, and quite a few global rates are negative right now. Maybe the easier trade's really been to try to, just kind of be boring and catch the bid on the 10-year and turn the rents the same way on the long side on this thing. Talked about big support around 132, 10, 11. But, edging into, what does this actually mean for equities? Why is this happening? Is the trade over as far as, the fear risk on type trade with the S&Ps and the euro? Because, who's going to back, what is the value of the euro? I mean, if people are starting to back out of it, who's actually backing the euro? Ultimately, this is not a timely trading type conversation. These are just kind of theoreticals and conjectures really about what those markets may end up doing and the volatility that may come back into them. So keeping the 10-year in mind and looking at the S&Ps and also looking at the euro, what's really interesting about the euro, and I'm going to pull up the euro chart here really quick, is, this. This is the there's the euro. I was looking at the Canadian dollar. I thought I was losing my mind. So, as the S&Ps have rallied back quite a bit, the euro hasn't gained back nearly in, correlation the ground that the S&Ps have actually rallied back. I mean, the euro is kind of poking its head up a little bit this week, but in my mind, it's not a very timely concept to try to short the euro right now, because you don't know when this thing may fall apart again based on some of the things I said earlier. But looking at this particular trade and saying, you know what, this is probably ultimately going to happen. We're going to go back and retest, the 108s and maybe even get lower and do the 107s, just because of the uncertainty there. How do you not get shaken out of the trade? In my mind, it's real simple. We've rallied back up into the top of the mountain on a relatively wide profile on the euro, being that 111.40, 111.50 area. So how do you make money with this? If you're looking for that big pullback and you don't want to get shaken out and stopped out like I seemingly do a lot of times, getting stopped out of some trades a little bit too tight, putting on a euro short right now, buying some in-the-money calls on it, and just waiting, because as you know, David, when you buy those kind of in-the-money options as a hedge against the underlying, you're really kind of sapping out a lot of the premium on the insurance that you have to pay to hedge it. But alternatively, you have to have a bigger move to really take advantage of that situation. So in my opinion, looking at the 10-year, looking at the S&Ps, like that volatility may not be over, and looking at the euro, if this euro does come apart in that scenario where you're hedged and you can kind of let it fly up a little bit more and not really sweat it out and not have to get stopped out, if we get this volatility that comes back into the S&Ps and the euro starts coming apart, those calls a lot of times in that scenario in the euro will hold some value, and you're making money a lot faster on the short going down while the calls are kind of holding their premium value. So this is the trade I really like right now. And I said a lot there, but shorting the euro right now with an in-the-money call hedge, you can just kind of go to sleep, pet the grandkids' heads and go play golf or whatever, and just kind of wait this thing out, because I think we're in for some more downside pressure on the euro.
Now I wanted to get back to Thursday night.
Okay.
We get the big news, but the news I thought actually started on Monday, and that was when we saw, I think it was maybe 10:30 in the morning, someone posted that the futures contracts, they were rapidly shrinking the margin going into that in a whole variety of things. Mm-hmm. I was going to think that, maybe that's the wisest thing they've done in a long time. Normally they wait until everything's blown up and then they come back out and try to fix it. But maybe this is the first time they actually got in front of it. I haven't seen a lot of hedge funds or any talk of any hedge fund blowing up. Normally when you get these huge moves that then self-correct fairly quickly, it becomes almost a self-fulfilling prophecy to go back up to the highs. But to me, that they couldn't really wipe out a lot of players, that I didn't see a great deal of the usual stuff that 120-point move in a handful of days in the S&P normally causes. Do you have any thoughts on that? I mean, to me, it seems like one of the best behaved markets I've seen, I'm thinking, in a long time.
That was just odd, to say the least. And they kept, saying, oh, well, they kind of dust some some of the guys from the past, the Gabellis of the world and all that. They kind of dusted them off and brought them in when the market was going, hey, everybody's going to be okay and the market's going to be fine, and this is buy the dip thing. But and they kept having people on certain shows going, well, this is, our servers have handled this properly and it's an orderly market and blah blah blah. I mean, I hear what you're saying about this thing may go back to the highs, but there's some more shoes to drop, as you probably know, and it never got unorderly, and that was kind of wild. I mean, that was kind of
normally you have some kind of enormous instant scare, a move of 20 points in the S&P cash in a minute and two. No flash crashes in this move. No really end of the world prognostications from just what happened in the last 2 or 3, 4 minutes, which is normally what you get. Everybody gets bearish at one particular point and bullish at one particular point, and you see these a lot of gyrations before you get the kind of move that we got. I'm trying to remember a time when we came back up, closed at the highs, 2 days off of a low like this, and it just seems to me like it's been a long time before. I know they love to use the word orderly. It just means that everybody jumped off the cliff once at a time instead of all at once. But it is one of those things that makes me think, man, there is, like you said, a lot more to this. You want to hang on to the last segment?
It's
or
up
the
to
next
you.
segment?
It's up to you.
Okay. We got a few more things to talk about.
Okay.
The XLU?
Yeah.
Maybe?
Yeah.
Okay. We'll be back in a minute.
Okay.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
usually David White sitting in for the one and only Tom O'Brien. We're talking to John Logan. We'll talk to him through this segment. In the last segment, we'll talk about what fund buying is and what you should understand about it and why it's kind of tough to be short on a day like this, even before the market opened today. So what else do we have going on here? Let me get something was going on there. John, you back?
Yeah.
Okay. You were talking about the XLU. What are you looking at here?
Yeah. What can we finish up a little bit about those S&Ps?
Oh, sure.
The orderly stuff you were referring to.
Yeah.
You know, it's really wild because, you know, you used the word orderly, you heard it a lot. There wasn't a real, it was, like each person was stepping out instead of everybody at once. We all know that there's going to be some more rhetoric coming from, you know, the situation that happened, and maybe there's going to be a Spain referendum, and maybe there's some polling that's whatever, you know, other countries that are like, well, if they can do it, and then we can control our own currency, which will help us race to zero. There's a lot of that's probably going to come out, and because it wasn't kind of factored into everybody leaving it at the same time, you know, when is that event going to happen? And so to me, I think, you know, putting on some kind of, you know, again, it's hard to time those type of trades, but putting on some kind of long-term hedge scenario and just kind of waiting it out as one part of your portfolio. I mean, I'm not patting myself on the back or anything, but, you know, just even before the Brexit, I was like, you know, what is the, you know, there's not a great chance, by the way, of polls that this is going to fall apart, but it might not be a bad idea to buy some lottery tickets down south at 140 on the euro, on the pound. And, you know, you'd have retired if you'd done that. Just kind of, you know, so they don't let you in, there's no free lunch, and they don't let you into these things after the fact to make money. So, you know, sometimes you have to brace yourself for the possibility of the next shoe dropping. And, you know, what I was saying earlier, you're talking about the XLU. I mean, this 10-year, there's just, you know, there's a bid in it, period. And the XLU, I'm going to pull that up to answer your original question, David. And, you know, this has been, I've heard some people on TV, you know, the real smart guys saying, hey, you need to get out of your stocks that have risen in situations like this and double down on the ones that have pulled back. So what are they saying? They're saying dismantle your hedge, being long some of the XLU stocks, and just pile into the ones that you got beat up a little bit on the pullback. Well, you know, the XLU has done nothing but go up since, you know, the rally has ensued from the bottom here. And it hasn't been super exciting, I'll admit that. But, you know, this thing continuing to edge up, you know, this says something to me also, you know, because if everything was rosy and everything's going to get self-corrected, the 10-year wouldn't be sitting on the bid and the XLU wouldn't be sitting on the highs, if you know what I mean.
Yeah, but isn't it one of these things where everybody races to these and then eventually they just kind of roll over when the end of the world doesn't happen?
Yeah, that could happen. But again, I mean, what have we had, an 80, 90 point S&P rally in the last 2 days? Is that what it's been from the bottom?
From what, like 1992 to 2070 on the cash. So
yeah, something like that.
Yeah,
I mean,
so
that's to me. I mean, yeah, I hear what you're saying, but to me, that should have, you know, maybe caused some form of an exodus out of this particular scene on the XLU. And it just,
I would just say that the pop up here today didn't have a great deal of juice. So it could, I could say it may be more of a coin flip for me. I'm not saying one way or the other, but
I'm looking at more of an indicator than pile into the XLU, if you know what I mean.
Oh, okay. Yeah. So you're just saying this is kind of a canary in the coal mine, not a particular play.
Yeah, exactly. I don't know if I'd be, I mean, at bare minimum, what I was saying about the guys saying, "Oh, you need to sell these things that have been up and buy the ones that got killed on the Brexit thing," I'm saying it may not be a time to dismantle these so-called hedges, and this particular sector it's up. Hey, listen, it is what it is. There's a bid and an offer. This is where the market has decided where this thing needs to be right now, and you know, try not to overthink it, and it is what it is. And that 10-year, man, it seems like a foreboding type of thing that we could go a lot higher in the 10-year, and the 10-year being seemingly the easier trade than trying to time the S&Ps right now. Is something to be said for that.
Well, let's talk about the XLF for a minute. Wasn't on your list, but I'd like to talk about it, mostly because the news has just broken, and that is that I think only one bank had any problem with the stress test. But guess what? They're all out running around after the bell tonight saying that they're going to be doing some share buybacks. Billions and billions of dollars that we're setting up for share buybacks. So probably one of the weakest sectors, especially the XLF. But saw a little bit of bid out there on a couple of the Euro banks, too. So now we're probably going to get even a little bit more on this XLF tomorrow with those share buybacks. But a lot of times those things are covering, I like to call them covering fire. That is trying to get a lot of these people that are on the back of wanting to short these things off them.
Right.
You've got a kind of a gap. I could see that maybe we even fill the XLF gap tomorrow on this. That's what I really kind of hate, is being in a stock where one person or maybe even a couple of people can make a decision and really ruin your trade.
Right.
Not all these stocks can actually just have a share buyback anytime they have a rainy day.
Right.
But certainly the financials and the broker dealers are pretty big on sticking it to any shorts that are on the wrong side of the market. They may have seen a lot of shorts coming into the end of the day. I'll look at that tomorrow. But certainly, I always hated trading against people like Goldman Sachs and being short, because at any time it looked like they were weak, they'd go off and fire off 20 new press releases about how they can turn lead into gold and share buybacks and everything else. They're the masters of it, and a lot of these banks are kind of getting pretty good at it too.
Yeah, I hear exactly what you're saying. What is old Goldman Sachs doing right now? Let's take a look at that one now that you brought that up.
I did look at it, I think, earlier today, and to me, the finance the sector continued to look the weakest of the bunch to me today.
Yeah.
I looked at it earlier. Light volume bounce out here. The one thing that you really have to say is that it did pierce the previous high volume low when you go back to February 11th at 139.05. It had 10 million shares in the depths of the end of the world with the Brexit on June 27th, 7.3. So it came in on lighter volume too. I'm not real. The one thing I dislike about it is that the leg up starting on February 24th to this April 21st high, and then that high to the low, the energy on the downside did increase. So normally that's not a bull sign to me on that, but maybe in a lower trading range out here.
Well, David, thanks for having me on, man.
You bet. Well, thanks for sticking with me and helping me fill up this hour just a little bit. In the last segment, we're going to be talking about why it's tough to be short the end of the month.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And this is Dave White sitting in for the one and only Tom O'Brien. If you're just getting in your car, just tuning in, the S&P closed up at the high for the second day in a row. Could even say that we do it 30 days in a row. Might take a breather tomorrow. After the bell tonight, the stress tests for the banks came in. I think only one, Morgan Stanley, had any issue at all, and they papered over it with a gigantic, $4 or $5 billion share buyback program that they announced. But you know what? I kind of looked for maybe that gap to be filled in the XLF anyway. So not too afraid of it. I did want to get into in this last segment, because I brought it up on my show before, but a lot of times people are not familiar with it. I know Tom talks about it, but he doesn't go deep inside baseball with it. And I thought I would just give you my 2 cents, since I spent a lot of time looking at the innards of the market. But there are 2 kinds of people on Wall Street that are around funds. One's called a money manager, and one is called a fund manager. You might have something like a fund that specializes in semiconductor companies. The charter for your company will say that you have to be 100% invested by the second day of the month or the third day of the month. And normally these charters, if you dig into them a little bit further, most of them, I'd say 85% of them in these ETFs or other funds, will say that you'll be fully invested by the last or by somewhere between the last 2 days of the month, first 3 days of the month. But for the most part, it's the last 2 days, first 2 days of the month. So we could literally go into the 5th and 6th of June or July, and they would still be under their charters. But what does happen is that 401k money comes in. There will be the money manager. He is a separate guy, the separate money manager dude, and what his job to do is buy maybe semiconductors. But what he will do is also put a hedge on those semiconductors. So he needs to know that he's got a pure play. That is, that ETF or the fund that the manager is running is 100% long that particular sector. He will then put on his appropriate and thoughtful hedge on the opposite side of that. So a lot of times you think these managers are all about maybe reducing risk or why don't they sell their shares. Well, the thing is, they've agreed to always be 100% invested come this time of the month. The Eagles, the big men of the street, know that a sucker should never get an even break. It's 401k money. You don't have any control about it. So it is rare, exceedingly rare, that you get the low of any time around this part of the month to get your 401k money put in. And one of the reasons why, Tom talked about it at the very beginning of the show, that we lined up a bull options trade, a call from Monday, because you've got just about everything going for you. The 401 money comes in. You got a lot of people that are very bearish. The market starts to move higher, which makes many of the shorts that are already committed to cover their positions, which means that even people that shorted at higher levels still have to get and cover their shorts to get out, and you get the proverbial short squeeze, which is what I played. But remember, shorting and being short at the very end of the month, you better have a very compelling reason, maybe once or twice a year, to be short going into this end. Well, we'll see you tomorrow. Same bat channel, same bat time. My show's at 2. Make sure you check it out.